Welcome to our special edition of PM Express Business Edition, coming to you live from Washington, D.C., on the sidelines of the annual World Bank meetings. We'll first hear from the ranking member of economy, that is Kojo Nkrumah, as we discuss fiscal issues and stabilizing the economy. And another special session again with the governor of the Bank of Ghana, talking about the road to economic stability. The economy had faced some challenges, but what has been the monetary role together with fiscal in stabilizing the economy? Well, the governor of the Bank of Ghana, Dr. Johnson Isiama, will be having a chat with the head of the African department, Bibi Selassie, on all these issues, and we'll be bringing you a playback of that interaction to our viewers here in Ghana. Several reports from the International Monetary Fund, the World Bank, have all given some strong indication that the Ghanaian economy is now on track. Talk about the views coming from several independent actors, including financial advisory firms, have all signaled that things are stabilizing when it comes to the Ghanaian economy and even what the Bank of Ghana is doing. But the big question here is that how can this current trajectory be sustained by this administration? Well, we get in the view of someone who is not in government but has been in government before about what should be done and what must be done to sustain the current economic recovery. Are there any threats out there? Could we slip into those debt crises? Could we slip into those expenditure overruns? Or indeed, we will get it good and better this time round? What about those who argue that it's about a typical thing that happens post-elections, and when we get into the election era, that challenge will come up again? He is the ranking member on the Economy and Finance Committee of Parliament, Honorable Kojo Nkrumah, and he's also a member of Parliament for Fuasie Yebi. He was also the former Minister of Works and Housing. As I get his thoughts on sustaining the current economic recovery, what are the threats, what should government be doing, and what checks would they offer to sustain what we are seeing right now? Kojo Nkrumah is my guest on PM Express Business Edition, coming to you live from Washington, D.C., USA, where the current or the annual IMF meetings are currently going on. You were a panel member on a very interesting discussions that took place as well. Help us some of the highlights that for you thought was critical to share with the global economy.
I think yesterday the conversation that I was invited to share perspectives on was about how we can unlock the insurance sector's potential in helping to do more with the Continental Free Trade Area. The Continental Free Trade Area has been signed up, the Secretariat is in Ghana, trade is started, but it's still limited. It is not really making an impact in the lives of millions of people across the continent. One of the outstanding areas is to do some work on unlocking insurance products and insurance capital. And I was invited yesterday to participate, on that panel about how we could do that.
I want to zoom it down into Ghana. I look at the pension funds, how much you've been able to mobilize. I look at how the insurance sector has grown, but you look at the restrictions when it comes to the laws and everything. How do we get around this challenge of tapping into the pension funds, tapping into the insurance funds to deal with the infrastructure, knowing where you're coming from as a former minister?
You're looking at all of these infrastructure, transportation, even real sector opportunities in Africa. And one of the things that is an unfortunate phenomenon is that people see Africa as a high-risk area to do business. So the first value of insurance is to de-risk this perceived risky environment by offering a lot more insurance products so that projects can move. You are doing infrastructure projects, you require financial close, there must be insurance in there. You're doing sometimes even PPP projects, there must be insurance in there. So the first thing is to be able to get a lot deeper insurance penetration in the market. Today, insurance penetration on the market is about 3%. The average is about 7% of GDP. We are doing even lower than the 3% when you talk of Ghana specific. So you need a stronger collaboration between the insurance industry and the African governments to be able to push a lot more insurance products to de-risk the investment ecosystem in Ghana. And then on the flip side, you also then need to be able to mobilize a lot of capital from the insurance industry. Like you were mentioning, the pension funds and other reinsurance funds must then also be able to see these as opportunities where they can get good returns on investment and therefore come in. And I think the conversation has been about how does the global investment community, with its larger balance sheets, its deeper sophistication on technology, how does the global insurance community partner with the local or the continent-wide insurance community to be able to do that insurance leg of things? And then on the other side, how do country governments and perhaps even the African Union and the Continental Free Trade Area Secretariat work to also make it easier for them to come in? And those are the collaborations that I think we've seen going on.
We look at the pension fund and how much you've been able to mobilize and all the rest. But again, when we look at the debt restructuring, we ask ourselves, should we be careful in any amendment that we do coming as a member of parliament to see how we can tap into the pension funds to deal with infrastructure challenges and our infrastructure needs?
Today there's been an easing of the investment policy, which now allows pension funds to go into other areas beyond government paper. We need to open up a lot more opportunity for the investment funds. And I think one of the areas that the pension funds should be going into is housing. Government cannot on its own fund the housing gap. You have a lot of pension funds which, if assisted to come in, will then be able to aid supply. And because you've already got a ready market on the other side, once these housing units are supplied, you are sure of getting payback on the demand side. So it's good that now the framework has been opened up and more of pension funds can go into other areas apart from government paper. But it will be good to create tangible opportunities in areas like housing so that a bit of those funds can move there. And then, for example, public sector workers whose pension funds are being used to fund this can use it as a basis to underwrite their mortgages and own property in the space.
I got in touch with you to talk about fiscal, sustaining, prudent spending and all that, but it looks like we may spend a little bit more time in this area as well. Does it pain you that we are still struggling to provide affordable housing in Ghana?
It's a need, it's an opportunity, there's a huge market for it, but the pieces must come together. I think before we left office, we put in place what we call the public-private partnership framework, because we were clear that the public sector cannot do it alone. The private sector, if they do it, is too expensive and they concentrate on the high end of the market. And so you need that collaboration that, one, de-risks, two, brings in some of the horizontal infrastructure that the private developers may not need to fund as part of the projects. Those ones need to be, may I say, taken off the project cost. And it is in that collaboration that you'll be able to deliver at scale and at the kind of pricing that you are looking for.
It appears that it is still one of the biggest hedges that as a country we are struggling to get around.
I know the Housing Ministry is doing some work on it. I think there was a recent conference where I heard the new minister speak very eloquently about the interventions that are being rolled out. I do know that funding remains a challenge, but that is why also it is important for the financial sector to come in as a partner. I do know, for example, that there is a series of conversations going on to create a housing fund. Not necessarily a government-led housing fund, but a market-led housing fund, which can be tapped into both by the private sector and the public sector as part of this PPP arrangement. And I think the earlier life is given to it, the better. I think if I recall, the Ghana Infrastructure Investment Fund was working on it as a sub-fund. And so their ability to do it quickly will help to unlock that part of the puzzle.
What did you leave in your handing over note when it comes to the Saglemi housing project that we are still arguing about what we should do with it, what should be done with it, how should we get it right?
I think you will recall that we went through a process to select a private developer so that we don't have to come back to the Treasury to fund it. That was a key argument we kept making, that they don't have to come back to the government balance sheet to fund it. And that was where we reached. We signed the heads of terms. My understanding was that the new administration wanted to examine it. I suspect they may have finished the examination by now. So hopefully, unless something has changed, any moment from now, we should be able to see them advance work. In fact, it was when they went to site and started clearing that, there was this story that there was a fire outbreak, etc. So there was a contractor who had been signed up and had moved to site. And I'm sure if they have completed the kind of understanding of the work we had left behind by now, they should be able to move forward with this as quickly as possible.
I remember the last time when I had an interaction during the budget presentation, you raised some concerns about certain things and the time would vindicate you. If I look at the current macro numbers, I look at how things are moving right now, do you think that those initial projections were not well placed looking at the numbers right now when it comes to the economy?
No. We had two major problems. We had a problem with balance of payment. We were not earning enough forex as a country, so we didn't have enough stock of forex to meet the demand. And as a result, because demand was outstripping supply for forex, the currency started tanking. That tank in the currency also translated into a lot of imported inflation, because as the currency was tanking, was depreciating, the prices of imported goods therefore were going up. And it came at a time when you had twin global shocks causing a global cost of living crisis. So if you will recall, we started off by trying to answer the question, how do we improve balance of payment? We came up with two things. One, a gold purchase program in 2021 aimed at ensuring that we could shore up our reserves and our forex by using CDs to buy gold, and in some cases even trading that gold for other commodities that we would have imported. So in 2021 we launched the gold purchase program using PMMC. That is what brought our gold reserves from 8 tons to about 30 tons by the time we were leaving office. And then we also had the inflation reduction program, which was aimed at bringing inflation down. Remember, inflation went as high as about 54%. So we had an inflation reduction program aimed at bringing down inflation. Now, what are the facts? If you look at NDA numbers, we had brought inflation down to about 23. And the forecast by Deloitte, for example, said that we were going to average 11% inflation for this year, following the program that we had started. Today, inflation, I think, is about 9.4. That 9.4 averages to about 17%. It hasn't even reached the 11% target. So you can see that the government is doing its bit following the program. They are using a few different instruments, but it hasn't hit the average of 11%. But I think that as a country, we can be pleased that it is coming down. On the reserves side and the currency side, so what has happened? The gold purchase program through PMMC and the Bank of Ghana is today what is being continued. The PMMC has been rebranded as Gold Board. They are continuing the program, they are buying gold. And now from the grown reserves, they are intervening on the market or dumping a lot of forex on the market. I think they've just announced that they are now going to intervene by about 1.5 billion between now and the end of the year or so. Remember at the beginning when we said this is what they were doing, they said it wasn't true and that it was good economic management. And then later, when the fund called them out, they admitted that it was true. When the fund requested that they put in place a framework for it, that was when the President, His Excellency the President, said that the Bank of Ghana was intervening but had stopped. That's why the currency had started depreciating again. And now that they put in a framework and they resumed intervention, you see the currency coming back. So the gold purchase program has grown the reserves, and the benefit of that is that now you have increased reserves that you are now partly using to intervene on the market. I think what is important in that area is that you have a clear framework that is not disproportionate. You are not using more of the reserves to intervene. You will rather build or find alternative uses for the reserves, because the downside is that if you dump all the reserves that we are building on the market, you would find that you've used about $5 billion, $6 billion to intervene on the market, but the opportunity cost is that we'll not be able to find anything that you have done with the money. And for many of the projects that are around us, they will still be hanging. So just to conclude, Yes, a lot of work was started. That work is being continued, and you are seeing the evidence, and the data will not lie.
Aren't they using the windfall that they are making from the gold sale to support the local currency, but still keeping the current reserve program and not being affected in terms of depletion? Isn't that a prudent strategy for any manager to do in these times?
So intervention is part of the, may I say, architecture for managing the currency. The questions you should be asking, for example, are how much windfall are you making? How much of it are you building the reserves to be? The fact that the IMF says 3 months of import cover does not mean, therefore, that when you get to 3 months or 3.5 months, then you can go to sleep and dump all of it on the market, because we have learned from our economic history that one major shock can wipe it all out. So, in fact, this morning, the Indian Central Bank governor was explaining to us that they've got about 11 months of import cover. Would you want to consider building some more buffers for the currency going forward? That's one. Number two.
Is that what the Bank of Ghana be doing?
Number two, I'm raising these questions. They are the ones who've been given the mandate to do policy. Number two, are there alternative uses for the reserves? The Bank of Ghana, if you look at the BOG Act, has a broad mandate to participate in the broader economic, may I say, management of the, Ghanaian space. What does that mean? For the other things that government looks to do, can the Bank of Ghana participate with some bits of those reserves that have been built, so that the government doesn't necessarily have to even tax the taxpayer to go and do those ones? So those are, I think, some of the relevant questions that need to be examined, even now that the gold purchase program has translated into such significant reserves that the government is dumping it on the market.
The governor and his team appeared before your committee in Parliament. You raised a lot of questions and pushed for some clarity on this, their interventions and all those things. As the program stands right now, are you satisfied with this level of intervention, or you think that, see, we need some more clarity, or Bank of Ghana has to be careful because it could come back to bite us and bite them?
I think the first thing is that we must all be happy that the gold purchase program, despite the initial criticism, it is bearing results, and today gold has become a major bastion of the Ghanaian economy. That's the first thing we must all be happy about, whether MPP or NDC. That's number one. Number two is that, yes, a clear framework of intervention is required, but not just required and hidden at the central bank, required and made, palpable to all economic watchers. So what is the framework for intervention? Is it just based on the announcement that the Bank of Ghana will make that this month we'll do 1.1 or what? Because that raises questions of sustainability. Is there a framework that says that, listen, we shall use a third or 25% or 20% of the windfall for intervention while we build up reserves? Or that we shall use maybe this other percentage to fulfill part of the Bank of Ghana's economic mandate, so that the Bank of Ghana can end up still supporting the economic management within the Ghanaian space without necessarily lending to government per se. So it is important that this framework is made quite open and clear so that everybody understands, and then you can see some sustainability in what is being done.
This is PM Express Business Edition, engaging the ranking member on the Economy and Development Committee of Parliament, and he's also a member of Parliament. We're talking about the economy, we're talking about fiscal issues, we talk about the IMF program, we talk about infrastructure financing, coming to you live from Washington, D.C. We'll be right back after this break. Welcome back to PM Express Business Edition as we talk about the economy, fiscal, infrastructure, the IMF program, with the Member of Parliament for Ofuasi Ayebi. I know I've gotten it right, you won't correct me. And also ranking member on development and economy in Parliament. Could you, fiscal issues, prudent spending. I asked I gave some of your members, and they tried to raise questions like, George, we're doing these things and this is the result. The current government also think that, listen, if we haven't been prudent what we are doing, we couldn't have gotten here. What do you make of all these concerns about who should get the credit for what is happening? Because my father can be the richest person in the world. If he leaves property with me and I don't manage it well, everything will be spoiled. So why don't you also want to give them the credit? They are managing things well.
Well, I haven't denied anybody's credit.
Yeah. Not you, some of them.
Well, I speak on the economy. I haven't denied anybody his credit. What is the fiscal situation as at now? When the government assumed office, we were on a particular, may I say, fiscal consolidation exercise. It was a government that said that they want to adjust the numbers by onboarding what they believed were some commitments. And for which reason they argue, therefore, that the deficit on a commitment basis will be higher than what it was declared to be. And they went on an exercise to gather data from ministries, departments, and agencies. We disagreed with that approach because, listen, if you go around asking people, everybody will come up and say, government owes me this, government owes me that. And you come and, adjust the numbers for it and say that the deficit is wider than it ought to be. We disagreed with that. But be that as it may, they did it and they submitted it to the fund, and the fund has accepted that if you say the deficit is bigger than what we had looked at and had come to agreement with before the end of the year, then that's fine. So that's your new deficit position. The consequence of that, therefore, is now that the kind of adjustment you'll be making going forward will be steeper. So what is happening? Now, in your fiscal program, you have a revenue target, you have a borrowing target, and you have an expenditure target. You are not meeting the revenue targets. You remember half year when the government came to Parliament, we found out that they had already swept about 11 billion from the balances we left. Despite the fact that they claimed there were no buffers, they swept about 11 billion. And on top of that, they missed the revenue target for first half of the year by about 3 billion. So you put that together, that was about a 14 billion gap on the revenue side. How they were compensating for it was that now on the expenditure side, they had to significantly cut expenses. So our argument that the fiscal strategy they put in place, the revenue strategy was failing, was proven by half year because they didn't meet the revenue numbers despite all the, may I say, the razzmatazz they put around the revenue measures. We have removed this tax, we will be more efficient here, we will reduce VAT retention from 6% to 4% and it will close the gap. Despite all of that, they missed the target by 14 billion. And the consequence, therefore, was that they had to now cut expenses. You have heard quite recently, I don't know whether it was Dr. Nimoy Thompson or one of the other economists who was making the point that government has had to scale back expenses. It's because the revenue has not performed. And yes, they are keeping an eye on the financing part of it because debt management is the anchor of the IMF program, and so they have to ensure that they stay within the debt limit. The consequence of that is that your fiscal strategy has not performed as you said it will. And so you are not able to deliver a lot of the things that you had promised you would deliver, to people. They've launched a number of programs now. They have to be able to fund it if the revenue was performing. They are struggling to fund it. That's why a lot of the ministers are complaining. They are now complaining they've not been paid. They are now complaining that they can't onboard, for example, nurses and other workers who've been given financial clearance. Why? Because the fiscal strategy is not delivering. That is what we must all watch. You can make promises, but if the fiscals don't deliver, you will not be able to meet the expenditure commitments, which means the promises will not be fulfilled. It is not the same as fiscal discipline, and we keep making that point. Fiscal discipline is when you set the targets and meet those targets. It's not when you set the targets and fail in meeting them and therefore you don't spend what you are supposed to spend. So the government still has a lot of work to do in meeting its revenue targets. Without meeting the revenue targets, it will struggle to expend, and without expending, they will not be able to deliver on the social contract that they have signed with the people of Ghana.
Kojo has a deeper understanding of public financial management. But for that man on the street, he sees inflation coming down. He sees the Ghana cedi stabilizing. He sees expenditure being squeezed, so we don't see overruns on the market and all those things. How do you compare these things as an IMF program where the staff report says that the current government is on track and things are working, with your financial scrutiny and economic scrutiny? How do we compare notes on these things?
The fund also was saying during our term that we are on track. And they are saying that the current government is...
You question the fund's assessment on the economy?
I haven't. I'm just giving you a matter of fact. When we were in power, the fund kept saying that we were on track. When we are out of power, they have now changed some of the language. Today, they are telling you that this government is on track.
Are you worried about that?
Those are
some of the reports have been a little bit damning on how you manage the economy when you're in government.
No, we will hear what the fund will say when this administration leaves office, and then we can compare the two. But I'm not even going to litigate that. And it is good that inflation is coming down. It's good that the currency is gaining some stability. when we say that a framework must be made known and publicized, it doesn't suggest that we are not happy that it has come down. Far from that. And this is the program we were, working on. So it's good that they are down. It's good for the Ghanaian businessman, for the importer at Abuso Kaim, for the woman buying goods for her children at home. It's all good. What we must all look to is sustainability, and to put in place the mechanisms that ensure that this will not be one of the many times when we have been on a program, we have attained some success, and then after the program, things reverse. Let me give you an example. I'm currently reading a book about President Kufuor's tenure, written by Ivor Ajimendua. And the statistics at the end of the Jerry Rawlings era, inflation was about 40%, depreciation of the currency, way through the roof, cost of living was way through the roof. And so the measures that the Kufuor government had to adopt are very similar to the measures that this current administration is having to continue with, the ones we started, which they are continuing with. The challenge has always been in sustainability, especially as you get towards election year pressures, etc. So I think what all of us should be doing is not so much even a re-litigation of the facts. The facts of 2021 gold purchase program, they won't change. How it is contributed to our reserves, it won't change. The inflation reduction program, those facts won't change. From 54% to 23 won't change. 23 to 9 won't change. The average target of 11, all those ones won't change. How do we sustain that going forward? And I think that across the divide, there are enough people who have an understanding of these matters so that the partisanship can be put at bay and we can have an honest conversation about what it takes to sustain.
Do you think that we should close the chapter about whether the current gains and recovery we are seeing right now is because of what the previous administration did or what this current government is doing right?
I'm not saying close the chapter. I'm saying look at the facts. What are the facts?
The fact that we should give credit to this government that they've corrected your wrongs.
The fact is that, and sometimes we get into an animated conversation that doesn't really deliver solutions. The facts are that we had a balance of payment problem. We introduced a gold purchase program in 2021. It is that gold purchase program today, through the then PMMC and today's gold board, that has shored up our reserves at a time when gold prices have gone up to $4,000 an ounce, unprecedented, and we have windfalls with which we are intervening on the market. Those facts are the facts that we must put out. Let the Ghanaian decide where he wants to apportion credit. But I'm saying that we have enough people around the table who understand these rudiments. What we should do is to focus on getting them together to have a conversation about how, therefore, do you sustain it? Is it through an unbridled intervention on the market, or is it through an intervention on the market governed by a certain framework of sustainability? Take inflation. The facts were that inflation came to 7.8% in 2018, 7.1% in 2019. After the global pressures, it went up to 54. We started a program to bring it down, so we came to about 23 when we were leaving power. And the forecast was that it would be average 11 this year. It's currently averaging 17. The program is ongoing. But what does it take to sustain single-digit inflation? That is where I believe our minds should be exercised, not so much an attempt to relitigate the past.
On the broader numbers, on the broader strategy, how do we sustain the current trajectory in terms of the economy?
So on the currency side, we are doing a lot of intervention from the central bank. They've announced it themselves, $1.1 billion this month alone. President Mahama admitted it when he met the press that it was because of the intervention that it was coming down, but when they stopped the intervention, then it started going up. What it tells you is that the natural equilibrium in the market, demand and supply, is not able to sustain it. It is the intervention or the dumping of the currency that is translating into this. And you can do that when gold is at an all-time high and you are making windfall. Okay, so is that sustainable? If it is not, what framework are you going to introduce to make it framework? So that you say, well, when we make windfalls, this percentage of it will be brought in, this percentage of it will add to the other reserve. So it is in building the sustainable frameworks that you can then see sustainability. The strategy has not changed. It's the same strategy. It's a gold purchase program, shoring up the reserves, and now an intervention from those reserves. But what the normal market must do, and we have said it as a minority, that, for example, exporters must bring back their forex earnings into their jurisdiction. You remember the governor said that they were going to audit the nostro accounts of the banks to be sure whether the banks were holding on or they were actually bringing it back into circulation. Those are some of the sustainable things that we have to be doing, and we have been very clear that if we do that, this will be sustainable. If we don't do that and we dump all the reserves on the market today, tomorrow when gold prices are no longer $4,000 an ounce, and therefore you are not making all of this windfall, what would the situation be like? So it's in about building those sustainable frameworks. The other thing on inflation, yes, imported inflation has come down, but you notice that non-imported inflation and non-food inflation is not coming down by that same margin. What it means is that the supply side issues for food production, storage, transportation, which translates into high food prices, they have to be dealt with. They have not been dealt with still. That's a sustainable way to deal with that. The supply side issues for locally manufactured goods, cost of electricity is going up. Cost of commercial electricity is going up. Labor costs are not coming down. Raw material costs are not coming down. Those are the sustainable solutions that we have to put in place. And we from the minority side have been very open in putting our ideas on the table, and we are hopeful that as all economic actors engage, we'll work around these strategies to ensure that sustainability is achieved.
Are your ideas and suggestions, even at the committee level, are they being accepted, or again, don't want to bring the politics in here? What about, you had your time, what did you do? Allow us to do our work.
That is not a helpful conversation. There's a role for the opposition in any government to offer alternative propositions and to bring in the 8 years that the NDC was in opposition, the argument was not that they had their time so they should be quiet. They made contributions. We in opposition will also make contributions. I'm happy to say that some of the contributions we have made, I see that they are being taken seriously. For example, when we talked about sustainability of the intervention and the fact that issues about forex earnings from exports should be repatriated into the jurisdiction. If you follow the MPC meetings, and even when the governor appeared before us as a committee, he agreed that those are things they need to do. And I think that it is evidence that there's no malice intended in the ideas or the solutions. After all, assuming there was something we did that didn't work, and we are sharing the lessons, and we have said we will do that any day, it's a good opportunity for you to listen and put it to practice. So from where I sit, I think that some of those suggestions are being taken in good faith. Others are also not being attended to, but that's the right of the government. Whether they will listen to those or not, that's the right of the government. In due season, we'll have an opportunity to observe, but I don't think anybody should shy away from putting their ideas on the table.
At your committee level, what are you going to do to ensure that these overruns, the checks, are put in place to ensure that at the parliament level, at the committee level, we try and check those things so that we don't wait for an election to come, or after election, according to what you're saying, the IMF will then come out with a different verdict or report about what happened in the economy?
Well, it's not what I'm saying. That's a fact. You have read what they said when we were in power and what they are saying now, but that's a different debate. So two quick things. One has got to do with ensuring that we are sticking to the medium-term expenditure framework. If successive governments will ensure that we are sticking to the medium-term expenditure framework, there's a high likelihood that election year overruns will be curtailed. The other thing is that the NDPC, I believe, requires some beefing up of their capacity to be able to quantify the programs of governments. They need a stronger fiscal unit to be able to cost properly the medium-term programs of government, so that when the budgets are being done, those budgets are done by the finance ministry in consonance with what the NDPC is observing. Now, when that is done, and if we stick to that medium-term expenditure framework, it won't matter whether we are in an election year or we are not in an election year. In the absence of that, when the political economy raises its head in an election year, chances are that you have a lot of commitments popping up here and there.
Do you think that when these things are done, we can mitigate these shocks?
I believe that it will help to mitigate the risk of high election year expenditure overruns.
Do you think that your colleague member of parliament, Arthur Forson, is he forcing or maybe it's a matter of time?
It's 9 months. And if I look at the data from 2001 under Yaosafo Mafo, I've just referred to some of those data points. If I look at the data from 2017 to even 2019 towards 2020 under Ken Ofori-Atta, look at the graphs. You will see that at the beginning of any administration, the effort is made to clean up, may I say, the heated economy. The challenge comes when the political economy raises its head. When the people say that, okay, you've cleaned up, but you promised me a road. So pay for the road and let's get the road done. And now you have to expend money that you have not raised. You will now find that there's an imbalance there. You are either going to get commitment overruns or you are going to borrow beyond your approved thresholds to be able to deliver on that expenditure. That is where the challenge has always been. They are yet to face that challenge, and it remains to be seen how they will respond to that challenge. I, however, believe that the benefit of history, if you study our economic history, should guide both him and future chancellors of the Exchequer on how we try to answer that question. For us, after 8 years, if you go back to our manifesto, we said we had figured out how to do it. And how to do it was to cut expenditure by about 3% of GDP and move it over to the private sector as PPP opportunities. They have rejected that option. And they believe that despite the fact that they are not meeting revenue targets, they will still be able to meet the expenditure commitments. It's only about 9-10 months. Give them some time and let's see how they try to square that circle. But this is what any administration does at the beginning.
5/10, 9/10.
I'm not going to be the one to give numbers. I'm sure the Ghanaian people will give numbers as the months go by, and as now the government has to answer the political economy question.
Do you think that the biggest challenge that will face this administration will be about raising the required revenue to finance their expenditure and then dealing with the political pressures in an election year?
It is an attempt to achieve that equilibrium that is always the challenge for any finance minister. You need the money, you need the domestic resources to be able to meet the expenditure commitments. All the promises you've made, 24-hour economy, one job, 3 people, 3 shifts, recruiting people in the public sector, building these roads, all of those things that you have spoken about, you need to mobilize domestic resources to be able to fund it. At the same time, when you try to push your foot on the gas pedal on revenue mobilization, you will face constraints in the political economy. The people will say, why are you taxing me for this? Why are you taxing me for that? It is your ability to strike that balance. That is the first challenge. You also want to do it at a time when you are not, may I say, over borrowing or exposing yourself to debt exposure too much. You have to find a way to square that circle. If it comes at a time when you are reducing your debt exposure, you have a challenge there that you have to try and navigate. We argued that the most efficient way to do that was a lot more public-private partnerships. In fact, when we came to opposition, we put a statement on the floor in Parliament. We have recommended to the government, but the government explains that they believe that they can mobilize the revenue to meet their expenses. No problem. I believe that we have an opportunity to observe and see what the opportunity cost will be.
If the current economic trajectory is maintained, even going into an election year, fiscal checking expenditure, whichever way is being done, whether orthodox means, rightful means, inflation going down, city stabilizing, do you think that your party has a chance when it comes to the alternative in terms of better managing the economy?
When we won by over or close to 1 million in 2017, and inflation was down to about 7.8% in 2018 and 7.1% in 2019, there were people who were making this argument that, if it continues this way, and the NDC. Nobody could foretell that we're going to have a major crisis in 2020. And the government's ability to respond to that crisis, how we handled it led to a loss of nearly about 500,000 votes by that election. Nobody could foretell the economic issues that were going to come after 2020. And again, how we tried to handle it, we lost the election by about 2.1 million votes. You cannot predict the kind of economic issues that are going to come up on the horizon. So I'm saying that this is early days of what Safo did in 2001, is early days of what Kenneth Ofreada did from 2017 to 2019, 2020. You'll see what my good friend Ato Forson is also trying to do. Where the rubber meets the road is when the political economy raises its head. When now you have to fulfill the expenditure commitments, and at the same time, the global economic conditions or no country is an island, the surrounding economic conditions raise their head, and it remains to be seen. I can only wish them well.
I remember that I had a chat with you on this year's budget. You raised some concerns. What are your expectations, or what should we use this budget to correct so that things will be stabilized firmly?
In 2025, we cautioned the finance minister. It's like we knew not to. In fact, our caution was that he should be true to the economic performance. You will recall that before the budget, it was one of the arguments that we made, because a new government suffers this temptation to try to redo the books to shape a certain narrative. Unfortunately, in our view, he fell for that. No problem, that is gone. But we also cautioned that it was important to get the fiscal strategy right, because if you don't get it right, you can't raise the revenues, and therefore you can't meet the expenditures that you have promised. And as a consequence, the political economy that people are looking to see, you will not be able to deliver on it. You will find in 2025, at least half year, the revenue shot close to about 14 billion, and therefore expenditure has had to be significantly cut. We are yet to see the year-end outturns. So my expectation for 2026 will be, one, they have to get the fiscal strategy right. If you try to be populist with the fiscal strategy, you will not, nobody likes to pay taxes. You will not get the revenues that you need to meet the same commitments that you have made. And the same people will come back and say you promised and you haven't delivered. That's one. So they need to get the fiscal strategy right so that they can get the resources to deliver on the social contract that the people of Ghana have signed with this administration. That is number one. Number two, they have to pay attention to their economic promises in their manifesto. Everybody is looking forward to the 24-hour economy, because one of the major challenges is jobs. You want the economy to pick up productivity so that it will create a lot more jobs for the thousands of young people. I don't know if you've been following social media, and a lot of young NDC supporters complaining that I've not been recruited, this person has been recruited in the public service after this person was sacked, I have not gotten a job still. Everybody is looking forward to the 24-hour economy so that it will boost productivity and jobs. So you want to see the government focus more on those economic commitments and deliver so that productivity will go up. We left 5.7 annualized. I think if I saw what the World Bank was saying, what was it, 4.7? That will be below, 4.3 will be below the 5.7 that we left. And if our 5.7 was not able to deliver enough jobs and comfort to people, will 4.3 be able to do that? So in 2026, the government still has time and opportunity to tone down on the populism and get the fiscal strategy right, and to pay more attention to fulfilling the economic commitments so that growth and jobs will be occasioned for people.
Well, you heard this Thought Kojo expressing some views on the economy, how we can get it right when it comes to fiscal discipline. But I know that the debate will still go on in your homes and your offices and in Ghana about what he has said and whether that is the right thing to do. Or what about those who will always argue that what did they do when they were in government? This has been PM Express Business Edition, coming to you live from Washington, D.C., USA, where the annual IMF World Bank meetings are currently ongoing. My name is George Wiafe. Have a great day.
Welcome to the 2025 annual meetings. Governor Talk series. I'm Babam Roselase, and I'm head of the African department here at the IMF. It is a great honor today to introduce to you today's speaker, who is Dr. Johnson Asiama, Governor of the Bank of Ghana. He was appointed in February of this year, but Dr. Asiama brings over 2 decades of experience in central banking, financial regulation, and macroeconomic policy management. His career at the Bank of Ghana actually started way back in 1996, and over the years held leadership positions there in banking supervision, financial markets, and research. He previously served as second deputy governor and director of macroeconomic management at WIFME, leading regional policy programs across ECOWAS. Dr. Asiama Johnson, if I may, welcome to this Governor Talk series.
Thank you.
Please welcome, really very grateful that you're here to answer questions. Governor, I wanted to ask you to this event today because you're inheriting an economy that has been gone through a lot in recent years. Through the end of 2024, we've seen a lot of volatility in financial market prices. Of course, there's the broader challenges of the economy emerging from significant debt restructuring and all the other shocks in recent years.
Right.
Not to mention quite a bit of exchange rate pressure. How have you taken the first few months in office? What do you see as the big challenges, and how are you confronting them?
Well, thank you very much, Abebe, and thank you for having me. It's been 8 months since we came into office, and just as you said, we came to meet a challenged economy. A challenged economy in the sense that, remember, we had the domestic debt, issue in 2022. Fiscal policy was highly expansionary. It led to us exiting the international financial markets. There was resort to domestic financing. You remember all the sovereign downgrades that we had to suffer. And so we came into office with lots of liquidity, high inflation, exchange rate that was, depreciating widely. And I remember when we came in, there was talk about whether we should, cancel the program altogether. There were doubts as to whether we would be able to, carry on with the program and end it. But I'm happy to say that 8 months down the road, we have turned the corner. Ghana is back. Inflation, we met it at nearly 24%. Currently, it's down to 9.4%. We have seen a strong rebound in growth. We are running ahead of program targets for the year on almost everything. You name it, inflation, reserves build-up, economic growth, we are running ahead. And we are happy to announce that we will be able to exit the fund program come next year. And so far, so good. First 8 months has been revealing. We think that we have done a good job. We are getting all the upgrades from our rating agencies, which shows clearly that we are on the right path. Let me also take the opportunity to thank the IMF for the support. We've had tremendous policy support. They've worked with us in this journey, and we intend to stay to go along with them.
Thank you, Johnson. Inflation, of course, is the most important focus for the central bank. And one of the things we've observed, and as you noted, has been the deceleration in inflation in recent months. Can I ask, did you have to, one of the first things you had to do was to tighten, or you had inherited a sufficiently tight monetary policy stance? What other actions did you take to get inflation to get to your target range?
So when we came in, we saw that we had to do a number of things. Even the entire monetary policy framework needed to be upgraded. We needed to strengthen the credibility of the central bank. There was a lot of liquidity, that had built up, and so we needed to do lots of sterilization. We also needed the complementary, efforts from the fiscal authorities, and so we had to engage the fiscal authorities at the same time. And then you also needed to look at food prices. So it was a complementary effort across all fronts that has helped to, deliver the disinflation we are looking at. But we give a lot of credit to the tight monetary policy stance we have preserved. Currently, even though we are easing, we are still holding that anchor very strong. Strong liquidity management, strong sterilization. For that, we will not compromise, even as we ease downward.
Maintaining such a monetary policy stance cannot have been easy. Huh? I'm sure questions must have been raised.
Very much so. The cost to the central bank's balance sheet has been immense. To give you an idea, almost stock currently is around 85 billion Ghana cedis. And out of that, the sterilization we have done this year alone accounts for about 65 billion. And so, yes. But there's a price to stabilization. There's a cost to stabilization. We are in discussions with the fiscal authorities for them to assist us, probably to pick up part of that cost. But as they always say, stability is a public good. When there's macroeconomic stability, there's a cost to it. Someone needs to pay for it. So far, we are in that discussion. Because remember, at the beginning, I made that point that I needed to rebuild the balance sheet of the central bank. As you are aware, we came in to meet a bank that was, hardly, solvent policy-wise. And so that is also being tackled alongside the stability that we have.
In addition to the impact on the profitability of the bank, there must be some impact on credit growth to the private sector also.
Very much so.
How is that evolving right now in this relatively tight monetary policy environment?
So we have seen some private sector credit saw some decline. And to put it into context, when you relate it to
the level decline or just the rate of growth?
We saw some rate of growth, decline in the rate of growth. But that aside, it is a fact that compared to our peers, private sector credit is the lowest, among our peers. It's one of the things we are looking at. You have a growing youth population. You have women-owned businesses that need to be supported with credit. And so going down the road, we are looking at ways to enhance that. But remember also that the non-performing loans ratio, for banks, we came to meet at a very high level. And so we are controlling that as well. We are urging banks to enhance their risk management frameworks so that even as we scale up private sector credit delivery, we do not worsen, that anchor. But it's something that we are tackling. I was surprised when last week I decided to look at the data. We have it disaggregated in terms of women-owned businesses, in terms of the geographical distribution of credit. What is clear is that it's all concentrated around the capital. And then women's own businesses need to have more of such, not to talk about the youth, front. And so the focus has to be on some sort of diversifying this range. But, that draws us into structural policy. So it's something we'll be working together with. Now that there's a return to, macroeconomic stability, this is something, a conversation we will be having together with the fiscal authorities to take this forward.
Thank you for that, Governor. Everybody's talking about gold these days, so I have to ask a question or two on that. Huh?
Yes.
Specifically, maybe we can start with this domestic gold purchase program.
Right.
Can you briefly explain how the setup of gold board, like I guess an analogy for cocoa board,
Yes.
how that is helping the Bank of Ghana to support the buildup of international reserves, what the thinking behind this whole initiative has been?
Right. So it all started from March this year, when decision was made to have a public institution that would be in charge or in control of the purchase, the selling, buying of gold, assaying of gold, export of gold. Why? Because we noticed there were a lot of leakages. There were all kinds of individuals that were involved in, buying gold, exporting gold. Now, when those exports were done, the foreign exchange was not returning to the country. And so that's how come Gold Board, which is a public institution, was set up from March this year. Since then, they've done a tremendous job. You can imagine it from March up to probably last week. They've brought in about $8 billion US just with this, this short time, span. And that has supported us in terms of our reserves build-up. What we do is we intermediate what comes from their angle, and then the rest goes into our reserves. So yes, the Gold Board framework has been complementary, but that's not to say they don't have their own issues. As an institution that is just starting, there are teething issues that have to be addressed. But we emphasize responsible gold sourcing, and we made it clear to them. So when they export, the foreign exchange accrues to the central bank. And so we intermediate the FX. And so it's like a revolving kind of fund that we operate. And I think so far it's been complementary, helping us to build our reserves.
So the FX comes to you and you give them CD equivalent?
We give them CDs. They use that to purchase again. And, the time span is short. Within 2 or 3 days, they're able to turn it around. And so that goes into our accounts. We decide how much to intermediate. And then the rest, automatically sits in our reserves.
And has that actually helped increase the level of reserves? Are you buying any gold and holding gold at the moment?
So we also have the large mining firms. They deliver bullion to us directly. So bullion
as part of the government's
yes, as part of the mining agreement.
Royalty,
so bullion goes directly into our reserves, compared to when we had the crisis, there was a time we had about barely 2 weeks of imports cover. Currently, we are looking at 4.5 months imports cover. So that gives you a sense of how far we have come. We want to build more and more of reserves because, as you know, we are still a commodity exporting country. The risks remain. And so apart from sound macroeconomic policy, we also have to make sure we have adequate reserves just in case, the headwinds approach.
Of course. You mentioned 8 billion in gold so far this year. Huh?
Yes.
What was the equivalent amount last year?
So last year, Gold Board was not there. We had what was known as PMMC, Precious Minerals Marketing Company. Now, last year, it was all liberalized. It was individuals that were involved in the purchasing and export. And so what I'm explaining is, at the time, when we compared our gold exports figure with, for example, what Dubai captured as imports of gold from Ghana, the difference was huge. I mean, that told us that there were all sorts of leakages, FX that was not coming back to support the country. And so this year, we've minimized it. Yes, we still have those problems, but we think that over time, we'll be able to eliminate those. It helps to build your reserves going forward. But again, sound macroeconomic policy is the first best policy.
Turning a little bit more to the functioning of the foreign exchange market, there has been the sense, I think, over the years, of course, partly reflecting a little bit the crisis, the shortage of FX, but even in that context, there has been this feeling that the BOG plays an outsized role in the FX market. If you could say a little bit about your framework for managing foreign exchange now, and where you would see yourself going in the coming months.
So the framework we have is a flexible exchange rate management framework. But as you know, that is like a textbook, framework. So we call it the managed floating kind of regime. Essentially, what we do is to smoothing excessive volatilities. And that is what our framework has been about. Yes, there were allegations about whether we were, intervening in the markets, but that was not exactly the case. Remember, between the second and the third quarter, we had to do a number of lumpy payments. there were all these large, arrears in payments to some of the IPPs. These were billions of US dollars. And then also, we also had some of the, domestic debt affected bondholders that wanted to, exit. They felt that because the currency had appreciated, it was the right time, to take up their investments. We had to allow them to go. And so we did a lot of lumpy payments between July and August, thereabout. And so you might have seen some bit of that. Now remember, because all these inflows accrue to the central bank, and it was happening at the time when we saw some decline in remittance inflows. Remittance inflows is another huge source of FX injection. You are looking at over 6 billion US dollars per year in remittance inflows. However, immediately after the currency appreciated, we saw a decline, and so in the mix of that, the central bank needed to step in, meet all those lumpy payments. The interbank market, FX market, had dried up during that time, and so central bank needed to provide that support. But I'm happy to say that the interbank FX market has come back. We have written to the mining firms, for example, to take all their inflows, through the commercial banks. So we are beginning to see some activity, pick up in activity in the interbank.
Except gold, I assume.
Yes.
Except gold. Or including gold.
Yes, except
Okay.
gold. Except gold. And so we are beginning to see some surge, some pickup in interbank FX market activity. With that, the central bank wouldn't have, to be that present. So what we have now is to intermediate what comes from the gold board, and then the rest is taken into our reserves. To give you an example, as at yesterday, we had committed to make available 150 million US dollars. This morning, when I checked, the market had picked up only $90 million. So 60 million automatically goes into our reserves. Same thing, Tuesday, we made available $150 million. The market's picked up less than half of that. So automatically it goes, into our reserves. So we do not over support the markets at all. All we seek to do is to limit the volatilities in the markets to ensure that we have that smooth, dynamics in the market. And that's the framework we'll maintain going forward.
You seem to be at a moment where there is significant supply of FX.
Yeah.
That's putting pressure on the CD to appreciate. How much of this kind of supply of FX is being driven by higher gold prices, remittance flows? What is the balance, or other exports? What is the
So we have
balance?
a mixture of exports. There's gold, but then there's also cocoa. Cocoa is doing well. And then the remittances. We have other non-traditional exports as well. So several of them. However, given that they are all commodities, primary commodities essentially, there's the challenge that we have to do more and more processing. My sense is that if we can do greater processing on three fronts, gold, oil, and cocoa, if we can increase the amount of processing that we can do there, that would reduce the vulnerabilities that we hold as a country. And I believe that the government is working hard on that. There's talk about reviving some of the refineries. We have a couple of gold refineries currently in town. They are just about to start refining part of the gold so that we don't have to export the entire Dory gold. Some processing can take place in the country.
Value addition.
Exactly. So we can reduce our vulnerabilities going forward.
Thank you. Now let's touch a little bit on the area of crypto and virtual assets. This is something I noticed that you've made some remarks about. In particular about firms using crypto assets to divert what you can, affects flows away from the economy. Can you say a little bit about how real, how substantive a problem this is, and how you're thinking about this at the Bank of Ghana?
So the virtual assets area is one area. We always knew that the phenomenon was there. But as you know, as some people say, crypto is like the air we breathe. It's around us. It's used around us. If you don't engage in it, you don't know it's going on. But we saw the phenomenon at play when remittances suddenly reduced. Apparently, the local currency had appreciated, and so therefore the diaspora that was sending the money, some of them were getting lesser amounts in local currency terms. And so we saw a diversion by way of the channels of transmission. It was no longer going through the banks. But currently, we've taken a number of measures to reverse that. But what we observed was that some of the parallel market dealers through which these were coming through indicated to us that they were using stable coins and what have you. And so suddenly there was that active use of virtual assets, to terminate even remittance inflows. So it confirmed our sense that it was an important area. We could not leave it just as that. We have to, step up and be able to regulate and monitor these. We've done a lot of work in the past 4 months to put together the regulatory environment. And I must thank again the IMF. They've helped us to put together a new bill to regulate, virtual assets. That bill is on its way to Parliament as I speak. And so hopefully before end of December, we should be able to regulate cryptos in Ghana. But I must say that passing a law is just one step, in this process. Going down the road, the ability to monitor those flows will be key. So therefore, we are developing the expertise, we are developing the manpower, we are putting together a new department altogether that will help us to regulate that area. But yes, it is an important area. We can no longer ignore it, and we're trying very hard to be able to regulate that as well.
Thank you. So I know it's still early stages, and you're creating the framework for regulation. But in your experience to date, how are people using these assets? Is it mainly as a store of value? Is it to transact with? Clearly, at some level, it's kind of cross-border transaction. But once these assets are, those assets that are held domestically, are people actually transacting with each other in these?
Because the informal sector in our type of economies is very large. There are business people who have very little by way of documentation. And because they don't have documentation, there's no way the traditional banks will be able to process, their payments for them. And yet they have to, send money to someone in Dubai or somewhere for some deliveries to be done. So once you have that type of demand, they find the use of, virtual assets as convenient. Less paperwork, it's fast. They don't pay any taxes. So that demand will always be there. And as policymakers, what we have to do is to try and have some control so as to prevent abuse of the system. It's early days. It's something that keeps me awake all the time to be sure that the legislation is adequate, to be sure that we can monitor these things. And so we've started by allowing a couple of firms into the sandbox. There's a sandbox environment that has just started. We're going to work with them. We won't leave them to do what they like. We will work with them all the way. It's a new learning. It's new to everybody. But I'm sure we'll get over that legislation very soon.
Thank you. One of the challenges, one of the big developments in recent years, of course, has been the public debt restructuring, including domestic debt. And that has had some impact on the balance sheet of firms in the financial sector. How do you see the situation now? Are you beginning to see some recovery in financial stability in the country?
Well, we also have this problem of the sovereign, especially, the impact on the banking sector. It's been significant. No two ways about that. We are exploring the options going forward. Do we, for example, impose an SOL limit on the sovereign exposures? If I had my way, yes,
SOL,
I would love the single obligor limits on, the exposures by the sovereign. It is something we are looking at. But yes, the kind of experience we have had has been significant. It should never happen again. When I cast my mind back in 2022, it's something we could have avoided. I'm at a loss as to how we allowed that to happen. But going forward, we are trying to build back better. And one other interest that we are promoting is to help put life back into the capital markets. As you know, that suffered a great deal. And so we are beginning to see some activity, especially in the corporate bonds market. Mm-hmm. Last week, I had a meeting with the CEOs of all the banks. And out of 23 banks, we have barely just about 5 or 6 that are listed on the Ghana Stock Exchange. But we have agreed on a program. We set up a small committee to get more and more of the banks listed on the Ghana Stock Exchange. That way, it's a win-win. We would have greater amounts of long-term, capital, what they call patient capital. And then at the same time, we'll be putting some life back, into the equities on the Ghana Stock Exchange. Yes.
You spoke earlier about the impact that the crisis, the restructuring has had on the balance sheet of the central bank.
Yes.
So what are the steps that you envisage taking now to try and repair your balance sheet? Importantly, of course, do you see the current situation as one that detracts from your independence?
So first of all, as part of the reforms over the past 8 months, we've had to make changes to the legislation. Legislation to strengthen our independence. For example, when it comes to exposures to government or central bank financing, we are taking all that out. A number of reforms that we are making to the Central Bank Act, which should permit us to be able to hold that anchor going forward. But that said, yes, the domestic debt issue has impacted to a large extent on our balance sheet. The central bank itself is policy solvent, but then technically you can say we are almost insolvent. The challenge is to be able to repair our balance sheet within a short time, but we are looking at it as a medium-term problem. And that said, operationally, we are able to function. However, over the medium term, we will have to rebuild the balance sheet. We will have to regain that solvency, both technically and policy and otherwise.
And the effect on the balance sheet impairment is not affecting your ability to carry monetary policy.
No, not
That's
at all.
clear.
Operationally, not at all.
Do you feel it has a bearing on your ability, on your independence in your interactions with the government, or this new legislation is going to buttress your case?
Yes, the amendments to the Central Bank Act that are on its way to Parliament will give us enough room to avoid that. But I must say that even at current levels, we have our independence. We in no way are we controlled by government. We are not constrained in any way at all. If at all, it is the central bank financing, that aspect is what we need to define and define properly. We need to define, for example, what constitutes an emergency, because we saw that those subjective issues probably allowed the play out of what happened in 2022. So yes, the legislation will help, to strengthen our independence going forward.
Finally, Johnson, if you could say a little bit about what your vision is for the next, for the rest of your mandate. What kind of a central bank would you like to leave behind? How would you like to position the BOG?
Right. So my mandate is clear. To achieve price and financial stability. It's been 8 months now. I believe we are on course. We are on course towards achieving that. But a couple of things bother me. First of all, the issue of dollarization. I've seen this for many years. I started central banking some 30 years ago. The phenomenon has been there. And so we are tackling it. What can we do to make the local currency the sole legal tender? And so on the 28th of this month, we're having a celebration. We call it the CD at 60. The local currency will be 60 years, this year. And we want that to mark a new beginning. Because when we use the local currency in all transactions, that enhances the efficiency of monetary policy. It's at the core of most of our problems. And so it's one of the things I would want to be remembered for. That I solved that problem. I made the local currency, the currency of choice. The next thing is to have a central bank that is agile, a central bank that is ready and able to contend with the new challenges that most central banks face. As I said, when I started my career some 30 years ago, many of the things we are seeing now wasn't there. For example, fintechs. We did not have fintechs those days. But I believe that if not handled properly, fintechs, for example, that area could be an area where a risk could emerge going forward. And so we are, looking at that industry well. We are amending the legislation there as well. And then you have the cryptocurrencies as well. This is another challenge for central banks. It wasn't there 30 years ago, but I have to contend with it. What I want to see is a central bank that is ready and able to adapt. It is crypto today, it could be something else tomorrow. It could be anything, who knows? But we should have the manpower. We should have that agility. We should have the balance sheet to be able to contend with any of these risks as they emerge in the future. That's what my vision is.
Fantastic. Johnson, I'm afraid we've run out of time.
Thank you.
Thank you so much, Governor.
Anytime.
Really very insightful interventions. And
Thank you.
I wish you all the best of luck.
Thank you. Thank you very much. Thank you. Great. Thank you.
So that was our special edition of PM Express Business Edition, where you first heard from Kojo Oponen Nkrumah, a ranking member on the Economy Committee of Parliament. We talked about what we need to do to stabilize the economy, and also our special playback of the Governor of the Bank of Ghana. Dr. Johnson is here speaking about the roadmap to economic stability with the head of the African Department, Abebe Selassie. Well, I know the debate will go on in your homes in terms of how can we better stabilize or maintain the current economic gains. Well, you may be the better person to do the assessment rather than me. This has been George Wiafe for our special edition of PM Express Business Edition that came to you live from Washington, D.C., USA, on the sidelines of the IMF World Bank meetings.